My name is Linda Kreitzman. I'm the Executive Director of the Masters in Financial Engineering program. I'd like to welcome the members of our panel in here and David Jaffe. I'll introduce David in a few seconds. Every year, the MFE, in collaboration with the International Association of Financial Engineers, has a panel session on how I became a quant, where we're going to discuss the skills that firms are interested in when they hire financial engineers. We're obviously going to also discuss the current economic situation, and is there still a demand for financial engineers? I'm sure that this is why you're here tonight, so we'll tackle that, but I will leave it to our moderator, Nancy Wallace, who is professor at Haas and teaches in the MFE Asset-Backed Securities. She's also the California Chair of Real Estate and Urban Economics, Chair of the Haas Real Estate Group, Co-Chair of the Fisher Center for Real Estate and Urban Economics. So Nancy will be our moderator. I will not introduce the members of the panel. They will introduce themselves. But let me introduce the Executive Director of the IAFE, David Jaffe, and David is going to say a few words. Thank you. One more thing I forgot. One of the panel members, Maurizio Ferconi from Barclays Global Investors, unfortunately, due to the events today, the market is not here. Apparently, it didn't matter for these other folks. They did very well, I think. Second, Nancy has a commitment at 6 p.m., so I'll take over and continue with your questions if we stay past 6 o'clock. David?
Hi, good evening. I'm David Jaffe with the IAFE. Just to give you a quick heads up on the International Association of Financial Engineers. We're a nonprofit trade group started in 1992 to foster the field of financial engineering. We're based out of New York. A lot of our events in New York and London are practitioner-based events, so if you find yourself after graduating in New York, you'll be able to go to those events for practitioners. However, we do have student membership, which is $25. If you sign up for student membership, you can watch the videos of a lot of our events on some of the topics. Speakers include Andy Lowe and Jim Simons and Myron Scholes and other names that you'll definitely recognize. So I encourage that. The quant panel is something we started about 8 years ago in New York. We just started in New York for the first couple of years and then started to expand to other cities. We do it now in about 10 cities, including London and Berkeley and Ann Arbor and a few others, and we've definitely been very happy to come back to Berkeley several times. So with that, I will hand it over to Nancy, and if you have any questions about the IAFE, let me know. Thanks.
Well, welcome all of you. This is a great panel, so I think we'll all learn a lot. So what we're going to do tonight is we're going to let each panelist introduce themselves. We'll start with Lisa and go down the table. And if you could discuss both what you do and about your firm and any other topics you think are relevant for this evening's event, given the context of the market, that would be great. Go ahead, Lisa.
Okay. Well, thank you, Nancy. It's a pleasure to be here, and nice to see so many brave souls still interested in quantitative finance. I applaud your good judgment. I think it's never been a better time to get involved in the subject. Clearly, there's a lot for us to do and a lot for us to learn, and so I think it's a great thing. I work for a firm called MSCI Barra, which is about a football field off the west edge of the Berkeley campus. We do risk analysis for financial markets, a very interesting topic right at this moment. And we also build indices, another very interesting topic right at this moment. Those are the two main things. We have an interesting history. The funny name MSCI Barra comes because we are a merged company, and I can talk about that by and by. But the Barra part has its roots firmly in the Berkeley campus. Barra Rosenberg, a former professor at the Haas Business School, started this company in 1975. And so, being a university-started company at the edge of the Berkeley campus, we have a very corporate culture, of course, being a company, but also, I would say, a very academic culture. Research there is very interesting. And it's a great place to work. I've been there for 15 years. For myself, I would say that I also have, apart from working in an academic-style business, my own academic roots. Before joining MSCI Barra, which was Barra when I joined it, I was a professor of mathematics. This summer, I've joined the Berkeley Statistics Department as an adjunct professor, so I get to work from both sides of the street, which is very, very interesting right now, and be happy to tell you more about it as the evening goes on.
Okay, my name is Dave Klein, and I work for a small research firm called Credit Derivatives Research. Some of you may have heard of credit derivatives recently in the news. And we do research into the credit markets. Our clients are hedge funds, asset managers, sell-side banks, big insurance companies, and we recommend trading ideas, and we also do strategy pieces looking at the various aspects of the credit market. We also manage some indices as well. I wear two hats at CDR. One is to do the research, and the other is to manage some indices. One index that has been getting a lot of interest recently is what's called the Counterparty Risk Index, which tries to measure the risk of the counterparties to CDS, or credit default swaps. And with the events of the last month, that the counterparty risk has gone up quite a bit, and we've been getting a lot of interest in the research that we're doing. As far as personally, my background academically is in mathematics. I had a bachelor's degree in mathematics and a master's degree in mathematics. I tried unsuccessfully twice to get a PhD in mathematics, both times discovering that I enjoyed programming computers more than I enjoyed doing mathematical research. And so after I dropped out for the second time, I was a software developer for about 13 years. And after about 13 years of being a software developer, I discovered Mark Rubenstein's website. Mark Rubenstein's a professor here at Haas, and he described this thing called the MFE, and which I had no idea what it was, but my sister was getting married in the Bay Area the next week, so I called up the MFE office and asked if I could do an interview, and they were kind enough to grant me an interview, and I applied. And so I'm an MFE 06, so if any MFEs out there, I was sitting in those seats 3 years ago. And that's pretty much my personal and business background.
My name is Ralph Goldsticker. I'm Managing Director of Research at Mellon Capital Management. We're an asset manager here in San Francisco. We manage about $200 billion worth of assets. About half of that is index funds, and the other half are systematic quantitative strategies. In terms of full disclosure, I would have to say I've been a quant for 30 years now, but never really necessarily consider myself financial engineering, that I think quantitative research is much broader than just financial engineering, and we can talk a little bit more about that if you want in the Q&A part of the session. In terms of processes, though, everything we do is strictly quantitative process driven. So that's in terms of our strategies we have here. We mentioned index funds. We do global macro, so everything at country level, stocks, bonds, currencies, using indices, both in terms of trading and valuation. And then we also do quantitative equities as well as quantitative fixed income. I was saying, Dave, we actually launched a hedge fund just earlier this year using nothing but credit default swaps. So lots of quantitative things going on, and financial engineering supporting a lot of that as well.
Thank you very much. So we're going to talk some about some specific questions that we have, and then later on we'll open it up to questions from the audience. But I thought we might start out, given all the problems we're seeing right now, sort of a longer view of getting training in quantitative methods in finance and what you see as the future, given all that very negative press that we're seeing that's very directed at the industry. Can you take us like 5 years from now, a little bit longer from now, view of where you see this industry going? Who would like to take this? Ralph, go on.
I can take a first shot. I think it's sort of mixed. I think the financial engineering that was done, isn't going to go away. It's been done well, but I think the market lost sight of the inputs to the model, the assumptions behind the model, are just as important as the arithmetic and the calculations that go into it. And you can think of the subprime. And when you do a mortgage model, when you have 20% down payment versus 10% versus zero, documentation, all those kind of things, that people sort of lost sight of the inputs of the model. So I think from that point of view, we've seen a backlash. It's the financial engineering. But I think the idea of securitization of modeling and things like that's not going away. I think the inputs get more rigorous. My forecast is sort of mine, I'm not sure it's going to play out or not, is given this backlash, given the problems with liquidity because of the opaqueness of a lot of these structures, you have these things out there that you really don't know how to value. It's what's causing the credit crisis we're facing now. My forecast would be that the structures going forward are going to be a lot simpler, a lot more transparent, a lot easier to price, at least until we get market comfort again that if they buy something, they know what it's worth and they can price it fairly. So there'll probably be a little bit of shift away from very complex types of structures, but the issue of securitization of building structures to using financial engineering to create products that meets people's needs, that's not going to go away.
I guess I would just add to that comment, and that is that certainly I wouldn't foresee financial engineering going away. You're still, it's sort of like saying our computer's going to go away. I don't think computers are going to go away. Financial engineering you should view as a tool set, or I view it as a tool set. And but what's happened in the past few years is things did get very complex, and when we talk to clients, there's a real desire for transparency. That's a word that comes up repeatedly. And so as far as what people work on may change, and that's part of, I think, why you should be interested in this industry, because there's constant innovation. But it's also the case that there's nothing, there's a beauty in simplicity as well. So when you start looking at these structures that are hugely complex, they were very fun to work on, but people also perhaps lost sight of, or couldn't comprehend how things would work out ultimately. And so I think we might be in a slight retrenchment now, but it's really the tool set that's required, or that firms need is once you start using them, you're not going to stop using them.
So since many of you may be interested in applying for various programs around the country, including ours, hopefully, Lisa, you talked about MSCI Barra as being a more academic environment, or at least it has a feeling of it. How do you look at employees versus, say, a MFE, a master's in one of the sciences, or a PhD in like math or physics? Do you have roles for all of those types of employees, or are you more selected to one type of employee versus another in terms of background?
Well, we have roles for all of those types of training. In fact, it really depends on the kind of work that you want to do. In research, in the core research areas, it's very important to have a super strong quantitative background. And I think while we don't necessarily insist on any degree, a PhD in physics or mathematics or statistics or operations research, something like that is generally necessary just to have the right tools at hand. But it's certainly not required to have a PhD, nor is it sufficient to have this particular degree. It's also important to have a very economic and empirical outlook to be able to ask yourself not just what theories do I need to know, but to be able to ask yourself a question: when am I matching the right theories to the problem that I'm trying to solve? So that would be on the research end of our business. But we have product developers, software engineers, data engineers. One interesting educational background I think that would be very valuable is somebody who really loves computing and information technology and understands kind of the workings of markets and how securities are put together. And that person would need, I think, very little mathematics, really, to do something successful, to look at data coming in and understand what it means and try and figure out how to organize it and put it together in a meaningful way. So we would love to hire people like that, no mathematics at all, or really very, very good software engineers. So we, and MBAs, people with good business background, people who present well. Of course, communication's good in any area, but there's a spectrum. So I would say we have a wide range of different types of talent and education that we're always looking for.
So David, do you think people need to come in with a master's at least or a PhD in the work that you're doing?
Probably something like the MFE is actually ideal for as far as the quantitative background for what we do. We're not hard quants in the sense that we're not spending our days looking at stochastic calculus, and we're spending our days in Excel trying to model the credit markets. And so really what the key skill for us is being able to translate whatever models we're using from a pragmatic standpoint and be able to communicate those to our clients. Our clients tend not to be very quantitative. So we cannot, when we write up a strategy piece, there are no formulas in there. There are no equations. There are charts saying here's why something's out of, away from fair value as we judge it, but we don't even necessarily go into the depths of the models that we're using. So really the key for us is someone who has a very pragmatic, is pragmatic, does not get bogged down with just falling in love with their own models or any models, but is more interested in what's going on in the market and how they can translate what's going on in the market to something of interest for our clients. And so communication is by far the most important aspect of that.
So Ralph, in terms of the the growth actually in securitization, there was also a huge growth in the numbers of programs in financial engineering across the country. So do you have any advice in terms of how you weed through all the various offerings that appear in the brochures and these various programs for a prospective student as they think about getting advanced degrees?
Yeah, I have a bias, being a Berkeley grad myself, although long before the MFE program existed. But I think you need to look at the programming and figure out what your skill set is what you're interested in. Are you interested in the mathematics? You look at the faculty. I was a student at Bar Rosenberg that Lisa talked about, and understand what their interests, what's in the course specialization of the program. There's lots of similarities there, but there's differences, and figure out, it's hard as a student or pre-student even to know where things are going, but try to understand where you want to go, what you like to do. Are you pure theory? Are you empirical? Do you have a feel for the markets? How much finance, how much accounting, whatever it is, and sort of match up what your strengths are, what your interests are with the program. But lastly, I guess the other part is geography. That if you want to end up in San Francisco or the Bay Area, lots of people recruited Haas and don't recruit anyplace else. If you end up in New York, I might give you a different answer. So the geography, if you have a preference, does matter too.
So Lisa, you don't have the Berkeley bias. Can you give us another unbiased view about institutions, or is yours also too Berkeley-based?
I don't know if it's unbiased. I'll just try and say something different,
Okay.
which is that one thing you can look at in a program is the degree to which it's a professional program, very geared toward getting you into a particular career, and the degree toward which it's a scholarly program, giving you a certain type of education. And there's a real range, and I have had occasion to look at program websites over the summer, and it always caught my attention. I think it's easy to pick up on what the program is trying to emphasize in that regard. So neither end is better than the other or better than the middle, but you can really ask yourself what you're looking for in a program with that kind of thing in mind. The pace will be different, and the emphases will be very different in those kinds of programs.
Well, one of the big differences is which are in business schools and which are in schools of engineering or operations research or math.
I guess I obviously have a great bias to the MFE, but one thing, if you're looking at various programs, and there are a number of great programs out there, is just look at, as folks said, look at the curriculum and see if you're interested, but also ask questions about placement. Who does the placement? because there's some excellent programs out there that the placement from when folks were doing their internship in New York and talked to other students found that the placement wasn't nearly as strong as it is in the MFE program. So that is something to consider.
So I also want to talk a little bit about career preparation, and you all are hiring MFEs or students that are trained in financial engineering, either with a master's or a PhD or an undergraduate degree perhaps. So what kinds of things are you looking for in your prospective candidates in terms of what you do in your companies? Lisa's mentioned communications. It's not just all math. How do you balance these various skills when you sort of set up who you're looking for your ideal candidates within a given function area?
I don't know if I have a very good answer to that. Have any of you read Malcolm Gladwell's Blink?
Yes.
This comes to mind. I mean, a lot of it is very personal and very, I mean, I wish I could say that, you know, we could go through some rigorous process of looking down credentials and deciding who to take. There's not as good a correlation as you would think between how people come across on paper and how they come across in an interview. It can be very different. It's certainly very important. I would say clarity in a resume is a really key thing. Make sure it gets across who you are. Don't clutter up with a whole bunch of words. Yes, you can get it onto one page. If you can't, try again. But a lot of it, when you get there for your interview, honesty, don't ever try and pretend. What the person who's interviewing you is going to be interested in is, I hope, whether you can think well, whether your training is a good match to the needs of the company and the position at hand, whether you're doing something that you're really interested in or just trying to get a job. So you cannot do better than be yourself and be honest. And I don't have a better answer than that. But that's who we hire, the people we like.
So we were talking about interviewing before the panel started. David, do you want to contribute to this?
Yeah, speaking as someone who was told I wasn't enthusiastic enough about an interview, I would just say I absolutely agree with what Lisa said, and that is just be honest and be yourself. And if you're going out for interviews, interview for things that you're interested in. Don't go out for interviews that you're not interested in. If you're not interested in the position, it's going to show pretty quickly. And so really it's just a matter of, for us, we're a very small company. So you have to, so we have to you know, work very closely with each other, and it's not like you're going to be working in a department with 50 or 100 other people. You know, there's going to be 4 or 5 people. So it's really a matter of finding folks who are really passionate about the credit markets, which that may sound a little strange to some of you, but those people do exist, and just looking and finding the person who is honestly interested in and honestly curious about what's going on. And so this sense of curiosity is really important also, because the credit markets are constantly changing. And so what we talked about a year ago or 2 years ago, we're not talking about that anymore to our clients. And so you have to constantly be looking at what's going on and what is of interest to our clients, and how can we find things that they may not be thinking about, and tell them that we think it's interesting for them to think about.
Let me jump in here. I guess I can answer your question and also give some advice. So I think in terms of we're looking for its conceptual ability, you know, that the technical skills are prerequisite. Everybody in the MFE program has good math skills, is a good programmer, some better than others. But for us, that's not the differentiator, is ability to apply that to the job, which is a conceptual ability. As far as Lisa's comments about the resume, my comment is this year's, you look at the resumes for the MFE class, everybody comes with very similar backgrounds, and you're not going to differentiate yourself with a resume. I hired a candidate, a student worked with me this fall, an internship, and what differentiated him was he took the time to understand what the internship was about. He attached a cover letter, said, I've thought about this, I'm interested in this, and here's what I do. It doesn't matter if it's right or wrong, but the fact that he demonstrated that interest in the field, made him stand out well above the other candidates who just said, here's my resume, hire me. They may have been just as bright, just as talented, but there's just one more resume. So to the extent you can demonstrate that interest, that enthusiasm, it will set you apart from the rest of your classmates. And it doesn't matter if it's MFE program or any other place you're looking, just the ability to demonstrate that interest, take that extra half hour, whatever it is, to do a little bit of research, check out the background, what's this all about, walking in prepared is a whole lot better.
So for a prospective student thinking about specific career areas within financial engineering or quantitative methods in finance, certainly there are fads, and we're seeing one of them being squashed right now with certain instruments that are in huge disfavor, although clearly are going to be there after this is over. How should a student think about preparing for an area within financial engineering? Do you have advice about that? I mean, should they specialize? Should they specialize in, say, fixed income or something about the equities market or something about the way we do the modeling? How do you see going forward people should prepare themselves?
I think you have to specialize in what you find interesting. You know, that, I mean, the nice thing about Mellon Capital, we're a very large firm and do lots of different things. I read the book, How I Became a Quant, and said, I'm a quant, I've been a quant for 30 years, and none of these things fit me because, you know, there's quants in the equity field, and the book was heavily fixed income and derivatives kinds of things. And so if you're interested in equities, great. If you're interested in fixed income, if you're into optimization, you know, option pricing, whatever it might be, but take enough courses, learn enough about the field to say, you know, this is at least for the first job what interests me, and the odds are that, so over the course of your career, hopefully you'll stay interested in markets. They're a lot of fun, very dynamic, but it's unlikely that over the course of your career that you're necessarily going to stay put. But you have to find something, if you're going to show up and work for 10 plus hours a day every day, that you want to get up and you're excited about in the morning, and it's just not an excuse to collect a paycheck.
Yeah, I would agree with that. Unfortunately, your class is in the fourth term at the MFE, so if you're an MFE right now, you may not. I'm assuming it's still in the fourth term.
It is, yes.
Yeah. You may not know. You don't know what you're missing yet, I guess. But the main thing is, for me, I came to the MFE with zero finance background, so I didn't know what an asset was versus debt and equity. But I had a great deal of experience as a computer programmer, and so it was very natural for potential employers to look at me as a quantitative developer or a programmer who, it's nice that I did the MFE, but what they really wanted was a computer programmer. It's very natural. It's a very natural, logical fit for my skill set, but that wasn't what I was interested in doing. I'd been a programmer for a number of years, and I was looking to stretch in a different direction. And so, what I tried to do, and it can be a very difficult thing to do, is just try to figure out what was interesting, what did I find the most interesting, and concentrate on that. And it happened that what I found was I found that I was very interested in credit, and was lucky enough that a position opened up that was basically the perfect position for me. So there was a bit of luck there, but basically it was a matter of not just jumping at the first thing that came down the pike, but trying to be honest with myself about what I was interested in, and trying to figure out how to translate that into employment and into a position.
So that is one difference with the MFEs, in that with the MBAs, we're usually looking for 5 years of experience before they come back to school. How important is prior experience in this field before you do a degree, as you look at potential employees?
Oh, well, it depends a lot. I mean, it can be great, and it can also be a problem, because it depends on what kind of experience you got getting that prior experience. So I would say that does not carry any particular weight with that qualification.
Mm-hmm.
it depends, for us it depends on the candidate. I work with another MFE who's probably the ideal candidate for, ideal person for our company. He was an equity options trader at Goldman. He's been in the market. He came back and decided that he wanted to do something more quantitative than being a market maker in options, and got the MFE. And so he brings with him not only now a credit background, but an equity options background. And so that was, we couldn't pick a better person to be working with our company. But for say the next position that we hire, that can be a nice to have. It's more a matter of, are you, we would love you to have some sort of market experience, but we don't necessarily expect that. I certainly didn't have any market experience, but we're really looking more for someone who's showing a passion for the subject matter.
So I know that some of you are modelers, and I've heard a lot about we need computer skills, but you don't work on computers all the time. But really, what computing skills do you need for these jobs? I mean, coming in, what level of training do you need in being able to program, and what kinds of languages do you expect people to understand to be functional in?
From our point of view, that someone who comes in knowing only Excel is probably not deep enough. We see candidates like that, or someone says, question, what's the biggest data set you work with? So I think what differentiates us is, especially people on the empirical side, working with very large data sets. As far as whether they've worked in SAS or MATLAB or whatever, sort of learning one language, it doesn't really matter. We're sort of a split shop that are security selection people with very large data sets, typically working in SAS. People on the macro side typically work with MATLAB, but it's really programming, you deal with large data sets, and then the specific language we're sort of agnostic about.
So we tend to not work with large data sets, and what we're looking for is, we do spend a lot of time in Excel. If you have MATLAB experience, SAS or R, something like that, that's very useful as well. We'd love you to have an empirical background, but you're not going to be pushing the limits of empirical science at CDR. So really, I think as far as the skill sets that our analysts have, it tends to be, in general, someone's worked with something other than Excel, but right now we probably spend 90% of our time in Excel because that's what in credit derivatives, the data sets at this point are not very big, or at least for the purposes that we use them. And it's more about boiling something down into something of interest for our clients, and that tends to be, so you need to boil that down into a chart in Excel.
Computing programming?
Well, it really depends on the position that you're interested in. If you're interested in product development and communicating a lot with clients, then the communication software, Excel, where you can do quick calculations and make great pictures in a hurry, and all of these Microsoft type gadgets, and you don't need very much more for that kind of job, and then other depth in other areas will be important. If you want to build a value at risk or extreme risk calculator for a very complex portfolio with all kinds of derivatives and stuff in it, you better be able to program in everything. I would say, I mean, MATLAB, everything we've said, MATLAB, SAS, R, you have to know SQL, Java, because we work with enormous data. We've got data all over the place. And we have these incredibly successful kids who are just at home with computers who come in and can do all kinds of interesting things in a hurry, and somebody who has to learn those skills as he or she goes along will not have nearly as much fun. And then there's all the stuff in the middle. But to do modeling, I would say a minimum requirement to do modeling would be MATLAB, plus a really empirical point of view to be able to want to do experiments with data and ask yourself questions about data. And with that kind of background, if you're strong in MATLAB and interested in data, you can get started in a research job.
Mm-hmm. So I frequently had MFE students that are already here, so you are all perspective, but students ask me or be surprised that they would have to deal with clients. So quantitative financial engineering is working with the instruments we've talked about up here at the table, derivatives of various kinds of modeling strategies. But how much are you working with clients, and how important are your skills in terms of managing clients and talking to clients and bridging the gap between the science that goes on or the applications that go on in doing valuations and working with your client base?
Oh, well, clients are hugely important. It's not
And why is that?
It's not have to work with clients. It's want to work with clients because they know a whole bunch of stuff that we don't know. I mean, it's not so much about us educating them. For one thing, is them educating us. Clients are actually work with these instruments. I don't trade. They do trade. They really frame the problems that matter. And what they also do for us is they force us to stop talking in what for me is a natural language, which is mathematics, and try and think about what the thing means in English or what is its economic relevance. And so I personally like to see clients as much as possible. And when we have young researchers come in, I try and get them to see clients as much as possible. I think it's a great thing.
Yeah, absolutely. I have to be prepared that my phone's going to ring at any time and a client is going to call and ask a question that may have absolutely nothing to do with what I'm working on at that moment, or I can almost guarantee it has nothing to do with what I'm working on at that moment. We publish, I probably publish 2 or 3 things a week. Occasionally get client questions about that, but normally it's just calling up and saying, hey, what's going on with AIG or some other name, and what do you think about this kind of trade? Some investment banks offered me, this kind of deal. Do you think it's a good deal or not? And then you have to go and we're sort of the outsourced research arm for those folks, and so you have to be able to quickly figure out what they're asking and get them the information that they need as quickly as possible. And so for us, since we're not managing money, we are helping clients. That is the job. And so it's vitally important to be able to deal with them and deal with them appropriately and do a good job for them.
Let me put a little bit of different spin on this. That's clearly for the people that want to work with external-facing clients. So I want to differentiate between external and internal clients. And so there are a number of people, depending on the size of the organization, that need to face external clients. But everybody in the organization has internal clientele. You build a new model. You just joined, you've been there for a few years. There's multiple layers that you're going to have to convince that you did your work right, that conceptually it's proper, that you did every step of the way, and that's your clients. You have to convince them that to take your model and shift it from research into production. And so the ability to communicate what you did in a way that's understandable and in some sense sell it up in the organization, because it's a change. And most organizations are reluctant to change. Why is your idea better? And we've been doing it for a while. And so the ability to deal with internal clients is just as important. You may or may not want to face external clients, but just because you say I want to be internal doesn't mean that it's not critically important to be able to communicate what you did and why it did, why it works and why it makes sense, maybe more important than the ability to communicate externally.
So Lisa, I know that you like modeling, and I know you're both at the university and also at Barra, but what do you find is the most exciting thing about what you are working on right now? I mean, can you describe an interesting project you're working on right now, or what's different about being in academics and that kind of research and the kind of research that's internal to your firm that you find particularly exciting and interesting?
Well, that's a whole bunch of
Yeah.
questions. I'll start. I don't want to take up too much time. 2 projects I'm very fortunate to be involved in right now. One of them is building an extreme risk calculator. Everybody likes that project. In spite of all we know as academicians about distributions and how complex they are and all their subtleties, we in practitioner land still think of volatility as the quantitative measure of risk, and there are very, very good reasons for that. And we are trying to not eradicate that so much as expand on it in a way that's, even 1/10 as useful would be great. Volatility has been just an ingenious and an amazing insight in finance. Another project that I get to work on is green investing. We're building climate-friendly indices and risk factors, another very topical area. It's not quite in the headline news as much as it was a few months ago, and will be again a few months from now, but also very, very topical. There is one of the reasons why it's so great to be in both environments, the university is and business, is that there is a large disconnect still. The strengths and weaknesses are fairly complementary. These two entities are trying to work together, and to be able to facilitate that even a little bit would be, I think, a great thing. So, pass it
So,
over.
David, I know you're working on credit derivatives. You can tell us at least something.
Something of interest beyond the fact
of
that
exciting interest.
beyond the fact that the couple dealers sent out emails this morning saying the markets are frozen.
Yeah, I know.
And so that prompted the question, will credit derivatives exist next year? And we decided yes, so we kept at work. Two things that I work on of the things I work on that I find especially interesting. One is the credit indices that I manage, and especially this year the Counterparty Risk Index has been very interesting to watch, because if you think of the names that have been in the news, especially because of credit, many of them are in there. Bear Stearns was in there, Lehman was in there, Wachovia was in there, Morgan Stanley, Goldman Sachs. So we get a lot of just, it wasn't that interesting an index really until about March, and then it got a little boring again, and then suddenly in the last month it's been completely fascinating, and that's not always a good thing, but it's been very interesting to see what's going on there. The other project that I manage that I find very satisfying and interesting is I manage our capital structure arbitrage strategy. And so we publish trades to clients on how to take advantage of the capital structure of companies. And what that means is we're looking at their CDS, their equity options, and what's the relative value between those three securities, and how can you take advantage if you have a view on the credit, how can you take advantage if you don't have a view on the credit, as to make money trading all three of those together. And so that's been that's a very fun project. We've had some good calls, we've had some horrific calls. We were long Lehman. That didn't work out very well for us, but it's very interesting, because it takes into account how are different securities working together, and how do they come apart, and is there anything to be taken advantage of there, and are the markets efficient, and if they are, why would there possibly be something called arbitrage there? So and given how the markets have evolved and how liquidity has dried up in some places over the last year, it's been a pretty challenging project, but very rewarding at the same time.
Ralph, do you have a project you could briefly explain with one of these large data sets?
We have lots. The nice thing about working in a large shop that does lots of different things is I get to dabble in lots of different areas. There's people who are working full-time on each of these. But for example, I mentioned our credit derivative hedge fund before. So people there, the signal is a combination of a structural model, basically a proprietary version of the Burton model, as well as a fundamental model, which is an extension of our long-short equity strategy. So there's lots going on there. In terms of currencies, we started with the PPP purchasing power parity model, and we're sort of moving from there towards more of a real exchange rate model. In terms of the macro side, given all this turmoil in the macro economies, both the U.S. and globally, trying to see if we can take some of these macro data and extrapolate the changes in earnings forecasts and try and get ahead of the curve there. So just a sampling of some of the things we're up to.
So could we have some comments on just lifestyle issues in terms of these kinds of jobs? Are these mostly 9-to-5 jobs or 7 days a week jobs all the time? And once you're there, is the pressure extreme? I mean, is that something that's a component of these kinds of jobs? Or is that something you could blissfully ignore if you become a financial engineer?
I think it's a function of the firm. I mean, so when things are hot and heavy, you have to put more time in. But if you work for an organization where people work 7 days a week, expect to work 7 days a week. I don't think it matters if you're a financial engineer or anybody else. In our shop, it's nice to be on the research side. You're not as tied to the market. So people on my team show up anywhere. You know, one guy comes in probably on the early side. He has a couple of kids at home, wants to come in early. And there's one guy who comes in closer to noon and works late in the evening. And so as long as we're all there a chunk of the day together to collaborate, I don't care. And so I don't think it really matters. Maybe it's exceptional for us. Most of the people at Mellon Capital, I say, closer to 10-hour days, 5 days a week. But if you're in research, you want to work 12 hours a day, 7 days a week, there's plenty to keep you busy. So I think those hours really determined more by the firm and the personality than the job description.
Yeah, and we are tied to the markets. So working on the West Coast, it's actually you have to be a morning person, or you have to train yourself to be a morning person. I actually get in fairly late for a market-driven West Coast job, but that means I get in about 6 in the morning. You'll see a lot of folks who are working in, and that is late, by the way. So you'll see a lot of folks who are working with folks in New York will often be in at 4:30 because they'll have a 7:30 call in New York. So that's the nice thing about my job is that I may get in early, but it also means that I'm out the door probably by 3 in the afternoon. And which means that I've got a couple kids. I can see my kids in the afternoon. And then, depending on what's going on, get back to work in the evening and just try to do some thinking or answer emails or things like that in the evening. As far as working weekends, we generally do not work weekends, but it seems like every weekend for the past month and a half, some company's gone under, and the government's stepped in to do something that affects the credit markets. So we're not in the office working 10 hours a day, but we're just spending a lot of time trying to figure out what's going on from whatever white smoke is drifting up from the various departments. We do at this point wonder about the folks at the Treasury, whether they're how much comp time they've accrued at this point. So, but in general, we're in early, and then we're out in the middle of the afternoon. The nice thing about our company is we're in Walnut Creek, so it's already a reverse commute, and we're not commuting at any time that there's any traffic. So that makes it that even adds to the lifestyle, if you will. But you do have to be prepared to wake up at 4:30 or 5 in the morning on a regular basis, and I know for a lot of folks that can be a showstopper.
Yeah. Is it a showstopper for you, Lisa?
So I can do it sometimes. I mean, of course I do it sometimes. No, I've never tried to do it regularly, so maybe it would be just fine. I can't say. It would be hard to imagine a rewarding career that didn't have high pressure or intense moments or demands of some kind. I think the most successful people in most finance firms are there when they need to be, and so at MSCI Bar it's very demanding, and my personal life is also very important, and I insist on devoting a lot of time to that too. I've never been very good at disentangling stuff, so I work a lot whenever it's necessary, and when there's a really important soccer game that my younger daughter is in, I really want to be there too. So I don't know how exactly it's all managed. We are very, very busy, for one thing, and another thing that helps in high-pressure situations is to have a really good team structure, to understand what your colleagues are doing, to communicate about what you're doing, you can't always hand stuff off, but lots of times you can work together in order to provide the sort of flexibility and power that's needed to be able to succeed in a very well-rounded lifestyle. So teamwork's a good word here.
So I have to go teach a class, and Linda's going to come up. We're going to have questions from all of you. So I'm sure as you've listened to them talk, things have come to mind. And so we'd like to encourage you to ask questions. And there are microphones. There's one in the front, and then there's one up on the upper tier. So it's really been a pleasure. Thanks a lot.
I don't need to moderate since we're going to open questions for the attendees in here. So go ahead. Anybody has a question? Do you want to use the microphone and ask your question?
Yeah, I'm curious about the foreign markets and the emerging markets. Are there more inefficiencies there? And if so, what are the challenges in exploiting them?
Do you want to take that, Ralph?
The conventional wisdom is there's more inefficiencies in the less developed emerging markets. Foreign developed markets is not quite as clear. The challenges, first and foremost, is just the frequency and quality of data. You just don't understand how good the data are in the U.S. Quarterly reports, you have markets you can, just the enormous amounts of data just doesn't necessarily exist, even at a national accounts level that's trustworthy in the developing markets. And then transaction costs are higher. What matters is alpha after your fees, and if it costs you more to trade, those inefficiencies may be left on the table as opposed to in your portfolio. So those, I would say, the two problems.
Other questions? Go ahead. Can you use the microphone, please?
I'm a grad student in the computer science department, and my research area is in parallel computing. So with the emergence of multi-core and cluster multi-cores, what are some opportunities in your area both for model training and for model evaluation?
Me? Oh, well, that's a really, model evaluation and calibration are two of the most important things that we do. It's can be very data intensive and very compute time intensive, so having engineers come in who are good at making programs go faster is obviously tremendously important. Also very important is keeping your mind on the problem. It's very easy to create model calibration and selection criteria that don't do exactly what you want them to do or what you think they're doing. I've seen many attempts at humor where people simulate data, give the standard tests to pick a model, and you can get the model. You can get your test to pick the wrong model. It's not lots of times, and these decision-making processes that are flawed in this way are really can be very entrenched in the financial modeling systems. So I think in parallel computing, you really want to understand the statistical decision-making underlying it as well as the computing if you can, because that would certainly be a big help. In terms of areas, one of the biggest modeling areas that's emerging is liquidity, not just because of the crisis, but even before the crisis, understanding tick-by-tick data. Now that we have so much of it, what the heck do you do with it? What is it telling you? How do you store it so that you can get it back again in a reasonable amount of time? What are ways to analyze it that aren't just looking for patterns as we humans tend to do, but also what is the true random processes that are driving the return forming process? This is something that you really want to understand. Getting all of this data lined up and analyzed properly is certainly something that would fall in the area of computer science and parallel computing in particular.
Yes. You, yeah.
Thank you for a great presentation. I have two quick questions. One is, if one would like to work on the Wall Street, what's better, to get masters in financial engineering or to get a PhD in some sort of quantitative finance? And second question is, lots of people with a lot of experience are being laid off now and companies are going out. Why would a Wall Street company prefer to hire a fresh graduate when they can get a guy from Lehman Brothers who was trading successfully for like 20 years?
I can answer the second question. Does anyone? I can also answer the first one, but you can, Ralph, go ahead.
I mean, Wall Street is always looking for talent. And so whether talent's a freshly minted MFE, an MBA, someone with a PhD, it really doesn't matter. I think as far as the degree, it's not the degree. I mean, there's roles for MFEs, there's roles for PhDs. You have to figure out what is your skill set. But what do you want to spend all day doing? And so I can't say one's better than the other. As far as why a freshly minted MFE as opposed to someone from Lehman Brothers, I can give you two answers, and they're only both have humorous. One, the guy at Lehman Brothers has certain pay expectations, and bring those back down to earth may be a little bit tough. And the person at Lehman has learned to do things, depending how long they've been there, a certain way, and unlearning their way and learning somewhere new may be problematic. Not necessarily, but it's a couple of possibilities.
So, actually, you did answer my question. I mean, I would have offered the same reasons, the same explanation. Wall Street is always looking for talent, not just Wall Street. I mean, certainly buy-side and sell-side firms are looking for talent. And we've seen with our own placement in here in terms of internship as part of the MFE program, after completion of 75% of the coursework, the MFE students have to do a 3-month internship, and placement as of today is, I mean, we have actually a couple to place. One is about to receive an offer tomorrow, and the other one will be interviewed tomorrow. So placement, I think I bet that, and I'm recorded so you can check. As of tomorrow night, midnight, 100% of our students will be placed in internships, all paid internships, not unpaid internships. Now, what's going to happen for full-time? You know, again, there are jobs. I mean, Wall Street is still hiring. I mean, firms are hiring. Okay, so some people are being laid off, and I think that, like Ralph said, you know, if it's cheaper, first of all, to hire a new graduate. I mean, the average compensation for one of our, I mean, for a graduate of MFE is about, the average is $150,000. So for firms, that's cheap. So. But, you know, what is going to happen to those who have 3-4 years of experience, and what's going to happen to some of our MFE students who are at Lehman? You know, as of today, I mean, no one has lost a job yet. Correct. Is this going to, I mean, you know, we don't know what's going to happen in January. But we've had actually a few students who, you know, lost jobs at Bear Stearns. 3 of them lost jobs at Bear Stearns, and, you know, a couple went to Deutsche Bank, and another one is, you know, at another, I don't want to say the name, it's a small firm, so another firm. It takes approximately, I mean, for these students, at this time, we haven't had anyone who has lost a job just today, but, you know, 3 or 4 months ago, it took approximately a couple of months for them to find a job. But we do facilitate that. Actually, our placement, we not only place current students, but our office also, through our office, we do place alumni as well.
Thank you very much.
You're welcome. Other questions, please?
Excuse me. I have a background in software for a number of years, and I'm right now looking into whether going into MBA or MFE. And I've heard some people do MBA first and then go to MFE. That's my question. There are some, you know, I'm not certain about things there. Second is, what does a career path in financial engineering look like? You become an analyst, and then what next? What do you do for, say, 10 years, 15 years?
Well,
You can answer for the first question. Go ahead.
I guess I'll skip over the MBA versus the MFE, but really it comes back. Comes back to what are you interested in? What you're going to do with an MBA would be different than what you're going to do with an MFE. And so, it can be hard to answer what are you really interested in, but if you look at the curriculum of the two programs, what are the classes that really stand out to you? When I looked at the MFE, it was just a list of classes, and they all looked, granted I didn't have a lot of knowledge about finance, but they all looked great to me. Like I couldn't imagine not taking any of those classes. So as far as career path, it really depends. I mean, it's completely, there's not a single career path. It's really what are you interested in, and do you want to take advantage of your your software background, or do you want to do something else? And if you really want to take advantage of your software background, your career path might be very different than if you're trying to, say, go do an MBA and then get a job in, say, marketing or something like that. It's just going to be, it's a pretty broad question.
I think his question is probably, if I want to enter the field of finance with my software engineering skills, right, skill set, should I do an MFE or an MBA? Was that your question?
Part of it, but I'm also willing to not look at my computer skills at all. How would a pure quantitative career? Rather more on quantitative than on programming.
This may not answer your question, but something to keep in mind is that we've got a couple different kinds of quants up here. I'm not a PhD, so there are many positions that my classmates would apply for that people would not have hired me for because I'm not a PhD. I don't have an academic research background. So the MFE is not necessarily going to give you that academic research background. And some folks, if you're really passionate about a position, you can go for it and try to get people interested in you. But you'll see many listings, and Linda, correct me if I'm wrong, but you'll see many listings where they really want a PhD. And
yeah,
so
yeah, I want to actually give just an example. 20 years ago, there was no real MFE programs out there, so Wall Street was hiring PhDs, and yes, for some positions, model validation, you're going to need, you need a PhD, or firms require the PhD as a background. But let me give you a quick story. Bloomberg, in their research department, we're used to just hiring PhDs. And there was one candidate in 2005 who just absolutely wanted to work with two people, Peter Carr and Bruno Dupuyer. I mean, he was just set on, this is what I want to do. And he had 3 concentrations, masters, applied math, statistics, and computer science. And I said to him, well, let's send your resume to Bloomberg, okay, and specific person, and send it. And response was, we only hire PhDs. But then my response was, wait a second, a PhD is going to be specialized in one thing. My guy has 3 specializations, so go ahead, interview. And if after the interview you think that he's not worth it, then, he'll move on with his life. And he's actually working now at Bloomberg. So it's sometimes a question of what skills you can apply and how, a resume is such that sometimes it's not enough. You also have to discuss, or this program certainly facilitates that when we discuss more in depth for the candidates, the MFE students' backgrounds and interests, and certainly research field. I think your other question was you become an analyst, and what else? Are you looking at steps?
Yeah.
Well, analysts, associates, AVP, I guess, assistant vice president. I don't know. How is it in your shop, Rob?
But I don't think the title really matters. I think the question is you sort of have Mellon Capital is an asset management firm, and so if you come in with MFE or an MBA, I don't think it really matters. If you want to do financial engineering, get an MFE. If you want more interested in economics and security analysis, I'd say MBA is a better background. But once you get started, you can stay in research. You can move to portfolio management. You can say, I want to spend more time facing clients. And so I think it's really the job content that you're interested in. And then, in any case, you can move up the organization, take more and more responsibility. How fast titles change, whether you become a director or EVP or whatever it is, sort of that's every organization has its own. But I think you have to pick a path between research, portfolio management, external facing, whatever it might be, and that's skills and preferences.
Okay.
And performance.
Obviously.
Success skill is to look at different things. And there's this tendency that we have, and was certainly emphasized a million years ago when I was in school, that you become a real serious expert in something. And more, the opposite of taking a broad view is seeming incredibly valuable. So you might want to, if you've been in computer science and been in very quantitative things, you might want to try something else. It's just a thought, but it seems like a good success in whatever direction you want to go. All the ones that Ralph mentioned, it seems like a good success factor to have a broader view.
Thanks. I think we had a question in here from you.
I was wondering, taking the MFE program is a pretty significant commitment. Are there any programs or things you can do beforehand to get?
I can answer that question. We do have a pre-program. So in fact, when we say that the MFE program is 1 year, two things. We have a pre-program with a review course in mathematics, a review course in programming, and a review course in statistics. And that is because we have, students who have worked for 5 years or 7 years, been out of school for a long time, so they need a review course. But here's what we do based on applications. We're going to work one-on-one with the candidates, with the MFE students, and we're going to design kind of a program for them where they're going to complete some requirements. Say, someone like Dave, I don't know, what requirements did we have for you? Finance, or you were so good that we said, hey, you just come in?
Yeah, I was so good that they said, please don't, just come. No, I actually ended up taking 2 courses in finance, corporate finance. And I took the math refresher course because my math degrees were many years in my past. And it was a lot of passive knowledge, but hadn't done any advanced mathematics in many years.
So, really it depends on your background. If you have someone with a very strong background in finance and economics, we're going to send that student back to school and say, hey, complete partial differential equations. And by the way, what about numerical methods and linear algebra or statistics? It really depends on the applications or the applicants. And in general, how many slam dunks do we have? Someone who's just has all the skills, statistics, math, econ, has worked in the industry. A lot of requirements in here. I would say anywhere between 2 to maybe 5% of our candidates. So everyone has something to do before their entry. Yes.
Are there mathematical or maybe game theory concepts behind how credit is frozen right now? And is the the government entities, are they using any such concepts to unlock the situation that we are?
Maybe you can take the
Well,
question on game theory.
Two of our recent research notes had game theory in the title. So, but we're really not game theorists. But one of them was looking at the TARP, which is the bailout or the rescue package that Congress just passed, and would any bank actually take advantage of it? And so, but as far as I would say, yes, people are looking at it from a game theoretic standpoint, but you probably will not necessarily see that certainly in the popular press, and or you'll see it from us we're not game theorists, but we're happy to occasionally throw jargon around and talk about prisoner dilemmas and things like that, or so.
Yes.
David, you talked about the typecast as your prior experience as a software programmer.
Mm-hmm.
So once you finished your intermediate MFA, how did you handle the struggle? How did you go about getting to, how did you overcome this?
Well, one thing I think I drove Linda a little crazy because I didn't apply for many interviews. And that was because it's very, it's very natural. You see someone with 10, 12, 13 years experience doing something. You can, certainly in the internship, the companies are going to hire to your strength because they've got you for 3 months and they'd like to get something hopefully useful out of you and give you a useful experience as well. And so I kind of avoided a lot of those interviews. And then as far as the MFE wound down and I was looking for work, I interviewed for a couple quantitative developer jobs. But I'm sure that when I was interviewing, it was pretty clear that that was not what I wanted to be doing. You can't disguise that. So, but what I was very, I don't know, I feel like I was successful at it, but I tried to be honest with myself as to what people were interested, why people should be interested in me other than for my software development experience and but it really came back to what was I interested in. And what I found, I was very lucky to get an internship in San Francisco at a hedge fund and doing credit, and they just had some fairly rudimentary credit questions, credit derivatives questions that I helped work on with them. And that led to I found that I was, something, I couldn't spell CDS a year before, and suddenly that was something that I was very passionate about. And so I was very fortunate to find a position where it was probably the ideal position for me in that it was nice that I had this programming background, but there's no programming for me to do. But it was nice that I could use that, but really build on my MFE. So it's really, I think that the important thing is just to try to be clear try to clarify what you're interested in. And it may be multiple things, but then pursue those things and figure out how you can get a position that's either working in that area or very close to that area. But if you know that, let's say you're a software developer and you don't want to have a job where it's 95% of it is programming, don't interview for those jobs, because if you're good and you seem interested in it, you'll get a job offer, and then you're stuck thinking, okay, great, it's an interesting time in our economy right now. I've got a bird in hand. It's not really what I want to do, but maybe I should take it now. So it's not an easy thing to do. It's just because you're dealing with a lot of unknowns.
Any questions? Yes. What quantitative, but specifically, what's your field? Physics, or PhD in physics and math, and wanted to enter the financial industry?
Yeah, I mean, a quantitative PhD who doesn't have a degree like an MFE, are there opportunities for transitioning into the industry without doing something like that?
The answer is, opportunities, yes, but you have to demonstrate an interest. I mean, finishing a PhD, you've demonstrated that you know how to learn, how to take a body of knowledge and get it. And it doesn't take a classroom to get that body of knowledge. And so, but if you showed up at my doorstep and said, I have a PhD in physics, what I'd take to get in the door, it wouldn't do you much good. To the extent I said, I have a PhD in physics, and I read this textbook, I know option pricing, I know whatever it is, and demonstrated that you've taken the time and spent the effort to learn enough finance that you could be productive on your time versus hire me and spend your money educating me, then it becomes a lot more interesting to me.
Let me tell you a quick story in here. Quite a few of our students with PhDs in physics or mathematics applied to the MFE because they sent their resume to an iBank, and the answer from the MD was, what did you do to learn finance? So we had quite a few candidates who tried to desperately find a job in finance at an iBank and came and did the MFE program. Quite a few.
Yeah, it's not necessarily a bad time also to take another year and get some financial background also.
We have 5 more minutes. Yes?
With all the turmoil in the credit markets, do you see anything moving forward, any particular facet or skill set that is going to be in higher demand from this situation that we're in?
Risk analysis.
Risk, and risk.
That's really going back to fundamental understanding of what markets are about. Good, strong economic background is more popular than it was, I would say, a couple of years ago. Do you agree with that? Risk is great. Also, an understanding of law can be very interesting. Regulation is very important. A lot of what happens to our clients involves changing government rules, and that's another thing that could be a good career to mix. So you've had, I think, some attorneys.
Yeah, we
in your
had quite a
program,
few attorneys. In fact, you hired one, and attorneys who came and did the MFE program. To date, we've had 3. So not quite a few, I guess, but some. 3, some. Any other questions? Yes, all the way up.
Hi, so my question is partly for David and partly for, I'm sorry, I forgot your name. The question is, looking at the market right now, do you see that some part of the curriculum should be refreshed or should be stressed more in MFE program? And for the MFE program, the question is, do you see a need to on stressing in specific area, like you just mentioned, risk analysis? Do you envision changing the curriculum a little bit towards that? And is that going to help?
You went through the MFE program, so maybe you want to comment, and then I'll add something.
One thing to keep in mind is that the curriculum does get refreshed fairly regularly. So the other thing to keep in mind is that the MFE is a 1-year program, so it's a very broad program. You get exposure to many things, and so I wouldn't. But you're not going to go. It's not like you're going to spend 5 years studying very deeply into each topic. It's a sprint rather than a marathon in some ways. So it gives you a great tool set to go out and then build on when you're in industry. So I guess what I witnessed was during the MFE there was a committee that looked at of students and faculty that looked at various parts of which classes needed changing or were there changes to be made. But just as far as, I wouldn't view it as, at this point, as being necessary to be too reactive to say what's going on in the credit markets right now. What's going on in the credit markets right now is fairly unique. Next year, the unique thing will be in some other market. So really, I would say, as I view it as that the program does refresh itself, but it doesn't need to react to everything that's going on.
Besides actually meeting with students and faculty, we also have a steering committee. So we have members of the industry, and with whom we meet once a year, and we review the entire curriculum. Okay. At this time, there's no change. We may add 1 more unit of advanced computational finance, but this is something that we'll discuss in November.
Through the internships and also the outside speaker programs, the program's really intrinsically dynamic. I mean, they're core courses, but that's far from
Correct.
all that's being offered.
Yeah. We have what we call practice seminars, so approximately twice a week we're going to have people like Ralph Goldsticker and David and Lisa are going to come and talk about, you know, what they do, topics of interest, what they work on, topics of interest to talk about topics of interest that our students could undertake for their applied finance project, which is a mini thesis, and then skills that they're looking for in candidates. But we do review our curriculum every year, and we've made some changes, never major changes. That it wasn't necessary.
Thanks. I have one more question for Ralph. You just mentioned in the beginning that financial engineering is all about taking some input based upon certain assumptions that you take, and then you do some calculation and come up with an outcome. How, I mean, for a financial engineer, you say that they learn some skills. So how important it is to learn the theory, the economic concepts as well, so that you make the right assumptions in the beginning? And do a financial engineer do this, spend time in analyzing what might happen if those assumptions fail?
I would say in terms of the candidates that we hire, those concepts, basic underlying economic financial theory concepts are crucial. If you don't understand those, the rest of it doesn't matter. And so part of understanding the concepts is what assumptions does models make. Every model has a certain number of assumptions behind it. Are they close enough to reality to matter? Are they too far away? What happens if you change those? And so as far as the candidates that we look at that are most attractive to us, is they have the conceptual ability, the understanding of economic theory, of financial theory, and then develop the toolkit here to apply it. But I totally agree that the toolkit without that underlying, empirical, bent or conceptual bent to apply it isn't going to, really get you through the day.
Thank you.
Would like to thank you very much. We do have a reception outside, so we would like you to please come outside and eat and drink and be merry. Thank you.
Very nice being on the panel with you.
Well, same here.